My name is Renee Targus. I'm the editor of Agribusiness Global, and this is Bob Trigell. Bob, do you want to talk a little bit about yourself?
Yeah, so I'm an agribusiness executive in the chemical space for 38 years. Been working in the biological space, I would say, for the last 20 years. And in the seed space, as an acquisition guy when all the things went down with Monsanto and other companies buying all those seed companies, I was always in the mix. Yeah, today I'm an independent board director for a number of companies and also an investor with private equity.
Great, thank you. So we're going to cover two topics today. We're going to talk about Black Swans, and then we're going to talk about acquiring biological companies. And hopefully you can hear us. It's getting pretty loud out there, so we'll do our best to speak up. All right, so the first question we want to talk about are what Black Swan events are continuing to happen in 2024 that you think might run over into 2025?
I think most of the ones we highlighted in my article are continuing. Some are just intensifying. I think from a stagflation standpoint, that was the number one issue that I said was going to hit the agrochemical market as far as putting margin pressure on everyone until the grower, right? Everybody's seen their costs go up. If you were on the retail side or distribution side, your costs went up. If you were on the manufacturer side, your costs went up because labor costs, energy costs, et cetera, everything went up. And you see some companies like today, particularly in Europe, are really suffering with that because of the energy costs. And then on the, I would say on the supply side, it just, or on the demand side, I should say, demand has not really grown or taken off with pricing to make up for that. So if you look at the commodity prices today, let's take, for example, corn. Corn is, $2 less, $2.50 less than it was, a year ago, right? And farmers can't make up the difference, so their margins are squeezed. If you take the soybeans, it's almost $4, right? And then if you take the cash price, it's even worse than that, right? So there's a lot of inventory in the market, and the demand is just not there. I don't see that changing. So what's the biggest headache I have from the inflation side is, and this is a global problem, but also a big problem in the United States, and I think I mentioned that this morning, is the national debt. So the national debt, if I look at it, without significant gross domestic product growth anywhere in the world, is really is going to drive more interest and more inflation, depending on what the politicians decide to do. And that is just poison for small business owners. And at the end of the day, farmers are small business owners. And the cost of money will continue to be expensive. Now, some people are saying, for example, okay, they're going to lower the federal banks, like in Europe, lowered this a few months ago, I think they went down like 0.25%. In the US, they're talking about the Fed rate going down. And of course, that has a domino effect globally, right, for the cost of money to basically, I would say, stimulate the economy. I think the interest rates will go down from the federal banks, but I don't think inflation is going to go away. I think the prices are going to stay high in certain segments, simply because there is, if you take the chemical space, for example, oversupply, right? And that's going to be putting pressure on margins, okay? I'm sorry, the price of money will stay high, but there's an oversupply situation in the market, both on the commodity side and on the input side. So I think that's an area of great concern. And you'd have to ask yourself, is there a bubble in the market? So when I see, for example, what happened in Japan this week with a 14% decrease in the stock market in one day. I've never seen anything like that before, other than in 2008. And we all remember what happened in 2008. And at that point in time, the federal banks also lowered the interest rate, right, to put money into the system to keep everybody from going broke. Well, there is already a lot of money in the system, so how much more money are they going to put in, right? So it's a tough, I think a tough situation when the government starts competing with the private sector for loan money, right? Because the governments have to pay back that debt, right? And they're paying interest for that. So they're competing with the small businesses. So I see that as a real issue. Then the second trend we talked about, I don't know if you have a follow-up question, Renee, or
No,
but
go ahead.
but the second question we talked about was China, right? I called it China unraveling, and we've been seeing that really throughout the year because there is just overcapacity in China, and it's not going away. So the question just is, you know, how long will the Chinese government subsidize the global agrochemical industry by keeping those capacities in place and you know, having low prices out in the market, right? So if you take glufosinate ammonia, you know, if it was an LG, it was going for about $65 a kg. I think the normal formulation was going for $35 a kg. Last I looked, and I haven't looked in a while because it was so ugly, it was going for $8.50 a kg. So how does the value chain make up that margin erosion, right? So, you know, especially with the cost of money, right? So it's a tough environment, and a two-edged sword, right? The grower likes it because he's getting cheaper product and he's buying, right? But he can only buy so much. And you know, so that's probably a little bit good for the farm economy. And I think, you know, the market right now has reset in certain places at the grower level because it has to, right? Otherwise, they're going to go broke. And what we're going to see is we're going to see some more consolidation at the grower level, which will lead to more consolidation at the channel level, which will lead to more consolidation at the supplier level. So consolidation is going to happen. It's just a question of how fast is it going to happen. And then I think on the commodity side, I don't really see a lot changing in the next few years. I think we're in an oversupply situation mainly because of Brazil. Brazil is just producing too much food, and it has nowhere to go. So the only thing I see on the commodity side igniting the market is if in the biodiesel space, if you have, for example, fuel for airlines, and that still has to be a technology breakthrough, and that'll take a few years. People are already investing in the processing plants, but you know, that hasn't really taken off. And, you know, so that'll take some time, but that'll be just like we had ethanol in the last decade, and the market exploded, right? Demand increased, and prices went up. You know, we have to remember, if you look back at commodity pricing, the corn price was at 2 something for a very, very long time, right? And everything was heavily subsidized, right, Eric? Right? Remember those days, right? And then all of a sudden in 2008, corn jumped to $8, right? So I think we're going to have a phase of, I mean, it's not very, very, I would say, good news for everybody, but you have to be sober. You have to understand where you are and what are you doing, right? So, you know, then I want to maybe talk a little bit about the geopolitical unrest. And that seems to be getting worse in the Middle East here in the last few weeks. So, you know, we've predicted this a long time ago. I think, I believe it was 2022 when I put the Black Swans out. No, sorry, in 2020 when I put the Black Swans out, that year, I said that there could be a political disruption with Iran, right? And that hasn't gone away. And it looks to me like, if I'm watching the news last night, that is heating up with Hezbollah and Iran. So we could see a major conflict in the Middle East, right? And that would mean all kinds of disruption from the supply chain, as far as energy, as far as shipping, as far as lead times. So there's that's one to watch, I would say. So energy, our industry is very energy driven, very much supply chain from east to west, right? The cost again of containers, for example, has gone up dramatically again, right? And it takes longer for stuff to get to the markets like Brazil or the United States, because people have to go around South Africa. They don't want to use the Panama Canal. The Suez Canal is being disrupted, right? So a lot of issues going on right there. So the question just would arise, I guess you have a question now. What do you do, right?
Yeah, exactly, kind of what do you do. But one of the things, you mentioned for Black Swans too was labor issues. What's your thoughts on that?
Yeah, so labor, I really see the only solution really for the modern farm business is through technology and getting more productivity, either through autonomy or through artificial intelligence, or with tools where you can take cost out, or the labor that you have to be more efficient. But labor continues to be a headache. It subsided a little bit, I think, because I think technology is starting to come into the farm operations. That's the only way to really hedge. I mean, we've seen it in places like India, right? All of a sudden, the herbicide business in India took off. Why did it take off? Because labor left the rural markets, right? There was nobody there to pick the weeds, and they had to use herbicides, right? So that was a technology shift, which still continues till today, right? I mean, I remember when I was a kid working on the farm, all the children, right, in the family, all the women in the family, the extended family was there for harvest, because we didn't have the machinery to get the job done. Today, technology's changed it altogether. So labor will continue to be an issue in certain spots.
So for the other Black Swans that you brought up, so how should companies prepare to get through these times?
Okay, yeah. So I made some notes here, Renee. So I'd like to maybe go through them. One, OpEx control. If you have to cut, you're already in bad shape. Okay? So keep that top of mind. Cost avoidance. Do I have to do this, or is this just a nice to have, right? Then I would say, going into 2025, have a conservative budget. Maybe budget 10% less revenue and do your OpEx based on that. And if you get 10% more, well, it should work out for you. I would say, two, if your business is in good shape, look for expansion opportunities. So, if you're a farmer right now in certain spots, right, so land prices have come a little bit softer, buy more land, make your operation bigger. If you're a co-op, merge with another co-op. If you can buy an independent retailer as a distribution business, buy that business. If you want to expand internationally, buy a good distribution business in a country you think your portfolio fits. Maybe look at mergers to take cost out of the business and get more economy of scale. I would say also really key for me, what's been key for me in the last few years, investing in growth segments, right? Whether it's technology or it's in manufacturing or it's in maybe diversifying into areas like biologicals. So that's if your business is in good shape, your balance sheet is in good shape, and you have cash to invest. I would say also cash is king. So you've got to really pay attention almost on a weekly basis, and control your cash flow. And in certain markets where you have long payment terms, you really got to watch your accounts receivables, maybe tighten that up. Have a better quality of business from that perspective. If you have cash left over and you don't have any place to invest it, pay down your debt. Really look at getting your balance sheet right-sized. If you have even some more money left over, I would say put some reserves in place to have cash to invest because prices are coming down. So it's a market where if you're on the buying side, this is the time. Okay. And then I think the one I really like the most, which is the hardest one to implement if you're a business owner, is embrace and adapt to the market. Because the market is changing. It's changing very rapidly, right? We went from 2022, a record industry, to 2023, to a disaster for most companies, and it is continuing. And I'm telling you right now, it's not changing. It might even get worse. Okay? So you may have to adapt, and here's the point, you may have to adapt your business model. You may have to think out of the box. I like to call them smart business models. You may have to see, how do I do market access differently than I'm doing today, right? So when I talk to many of the suppliers here at the conference, their number one issue is market access. Okay, so that's one area. The other area is, can I bring in technology from the outside and just become more efficient, right? So a lot of industries next to the ag industry are doing that already with artificial intelligence. Because what you're doing there, for example, from a service element, if you have let's say, a technical agronomist today that's doing 5,000 hectares, right, managing that, can he manage 50,000 hectares in the future? Because he has the technology tools to do that. You see the adoption of drones in our business, right? So connect artificial intelligence with drone application. That's changing your business model if you're an applicator or a grower. So you have to think not only in the traditional sense of go-to-market, you've got to really adapt to the competitive environment. And if you don't do that, you probably won't survive. And you see this on some of the bigger companies, right? They have high debt, they're losing money, their stock valuations are down, right? Their market capitalization is down, the shareholder is unhappy, the bankers don't want to invest, the bankers see the agribusinesses as a risky investment, so the money is dried up, and if you get the money, the cost of money is high. So that's the situation we're in. So, it's manage what you can control, right? and don't worry about what you can't control because you can't control it anyway.
All right, that's good advice. So
So-
adapt. So that leads us to a second part of our discussion today, which is companies diversifying their portfolio. So a lot of companies are doing that through biologicals. And so I'd like to ask you a few questions about, well, let's first start off with the mistakes. So what mistakes are you seeing companies make when they acquire biologicals companies?
Lack of focus. So they burn through the capital. So if they're a younger company and they're a startup, is really lack of focus. They try to go into too many markets, too many segments, too quick, and they run out of cash. They don't link their innovation model to what the market need is, right? So I think that's an issue for the smaller company. For the larger entities, right? I would say it's can they handle an entrepreneurial culture, right? So we've seen a lot of acquisitions by bigger companies, and all of a sudden you ask a few years later, well, what happened to that company? They just seem to be swallowed and disappear in this large entity, right? Right? And I could name a handful, right? AgriQuest, remember 500 million, right? Morphed into what, right? Becker Underwood. Anybody know what Becker Underwood does today in BASF? Right? Valagro, just a couple of years ago, right? Anybody hear anything from them? So, I think, when they entered the big company, they also, all of a sudden, big companies prioritize their investments. So here you have a small biological business. You're a $20 billion company, and all of a sudden you've got a $100 million entity with a lot of small projects. Are they really willing to, finance those small projects? No, they're going to finance their big projects, right? So the projects fall off the cliff. Cultural integration, right? I remember buying seed companies and integrating them into chemical companies, right? It was like apples and pears. The seed guys didn't like the chemical guys didn't like the seed guys. And, many people made a lot of mistakes along the way. And then a lot of companies, I think larger companies, underestimate the amount of investment still needed as far as market access, right? So the chemical business today, you really don't have to do too much anymore to explain to a farmer how to use a herbicide like glyphosate. He knows how to do it. But if you're going out there with a biorational product, that's a technical education. It takes the industry back 40 years ago when we used to have a lot of farmer meetings and we used to do a lot of education. Well, that takes money. You got to put people in the field. You got to show the farmer how to use the product, how to apply the product, what's the dose rate, what to expect, and timing is everything. So a lot of education goes into that. Then, do they really, as a chemical company, understand a business which is a biological business? Microbes are living organisms. It's biology. That's why we call them biorationals, right? Bio, right? Not chemo, bio, right? And then you got to really, do they really understand how to manufacture that and invest in a pipeline? So there's a lot of learning there by some of the bigger companies. As far as private equity goes, right? I would say, they always want to get the adoption rate up fast. So, are they willing to invest in that? You kind of want to make sure you have top entrepreneurs in those businesses. That's an issue. Sometimes you see a lot of retreads. One CEO, he does this startup. The next moment you see him in that startup. The following moment you see him in that startup. Well, my question is, in those 3 startups, has he ever actually done anything successful? Has he actually monetized? Has he made the investor money? I think private equity has a real issue with assessment of technology. I mean, they're financial guys. So, they hire consultants, but, they really don't know sometimes what they're buying. We talked about the focus regionally. And I think today, really, when you're looking at the market on the sell side has to be a cash flow positive business. I talked to a lot of investors in the biorational space, and they're not willing to take the risk anymore on businesses that are not cash flow positive. They're just not going to put money in. And then, they're looking really, from my side, I would say, you need to look at a business model that has really is going to generate a high adoption rate, right? So, it comes really down to that. And then really, a lot of times I think one of the mistakes you make is you don't look hard enough. Do they have enough, I would say, biological proof as to not only does the product work, but how does it work? How does the mode of action work? So there's a lot of places where you can make mistakes. Now, some people are very successful at that, and others are not. So, there are certain things I look for as an investor.
Yeah, so that was my next question. So, you talked about the mistakes of what they should avoid or be aware of, but what should they be looking for in these biological companies?
Yeah, so the first thing I look for is the management team. Who is the CEO? What's their track record? Have they done it before? And do they have skin in the game? So have they invested personally? Or are they just on the receiving end? The second thing I look for is the business model, is it executable? Can they actually implement? Right? Is it differentiated enough? Is it focused enough? The third thing is I look at the financials, right? And I just mentioned cash flow positive is definitely, are they well financed? Are they treating the money that I give them as an investor like their own money? Right? Or are they just, so I'm seeing businesses where people have sunk hundreds of millions of dollars, and then when you look inside the business, there's nothing there. I mean, nothing on asset value. Very little intellectual property, very little revenue, very little adoption rate, right? So the business model has to be, financially, being executed. The fourth thing which one should never underestimate is intellectual property. So do you have protection if you're successful? And there's a lot of gray areas in intellectual property. So you have to spend time and money searching to see what you're investing in is really protectable, right? Or can somebody else just come in and, copy what you're doing, especially if they have, lots of money. And then the fourth thing I really look for, I mentioned it a little bit, is the culture. Is the culture entrepreneurial inside the company? So let me give you an example of that. How are the salespeople paid? Are you paying them a fixed salary, or are you paying them a commission? Do you have real good entrepreneurs inside your sales force, for example, that if they grow the business really fast, they make a lot of money, and they're real entrepreneurs? Or are you paying them just like anybody else? Do they have an opportunity to have skin in the game, but they get a portion of the business especially if they're successful. If there's an exit, do they get to be part of it, right? And is there a motivation? That's could be one cultural element. Or is it an innovative culture, right? I mean, I bought one business, great research group, but nothing was coming out. So what's their track record? Are they launching products on a regular basis? That's a cultural dynamic, right? Is it a creative environment? So these are types of examples you got to look for from a cultural perspective. So those are my 5 boxes that I tick. And when I do my due diligence, if they're there, all 5 of them, your chance of success are pretty high. I would say if you're a larger company or going to a larger company, it might be a good idea if you leave that business standalone, independent, govern it from as an investor, and pump it full of capital to let it grow. And then just track it to see if the performance is there. If you try to integrate it into a larger company, usually it'll die. Right? Because what happens in a larger organization? You compete for money every year when you go for a budget. Right? So I remember when we put seed companies together with chemical companies, chemical guys would say, hey, I need money for this. And the seed guys would say, I need money for this. Well, the pie was not big enough for both. So somebody always has to suffer, right? And usually the smaller guy, the new guy, is not going to get the money. Okay? So that's the norm. So you're better off leaving it either as an independent business unit, maybe entity, or as at least as a strategic business unit with its own hurdles, right? So they actually prioritize smaller projects themselves, and they have a certain percentage of R&D that goes to that based on their revenue growth. If you mix the two together, the bigger projects will always kill the smaller projects. It's just human nature, right? To go where you get the biggest return, the fastest return.
So my final question before we take questions from the audience is, you kind of touched on some of this and you were talking about culture, but like after a company buys a biological company, like what should they expect? I know that there's been a lot of talk about how they expect a return on investment right away, but that's usually not the case. So what are some tips for companies acquiring biological companies? What should they expect?
In today's environment, I would say don't buy a company that's losing a lot of money. Right? I mean, it has to be working capital positive. The adoption rate has to be already underway. And if it can be self-funding, like I said, that's today's reality, Renee. So that's just the way it is. I don't think people are investing anymore in. Money's gotten expensive, right? So they're just not investing in anything anymore. I mean, from an investment standpoint, in the past, you could do, for example, 10 companies, and 3, blow out, and 7 go under. Today that's no longer people don't want to do that anymore because one, they don't have the cash to do that. The shareholder hurdles are much higher, right? So if I'm paying, 6% or higher for money, well, I want to make at least double that, right?
So does anyone have any questions for Bob? Okay, we got somebody back there. Would you like to come up?
So the question was, traditionally, the bigger crop protection companies, and please correct me, why they compete but also work together in alliances. Well, the answer to that first part of the question is because when they go into alliances, it's usually because the other guy has something that they want, or there's a patent conflict. That's when they work together, right? There's a piece there, right? And you saw it, for example, in the biotechnology industry in the past on the patent side, right? Because there were overlapping patents, or on the chemistry side, there were overlapping patents, and they argue about who's the owner. And before they spend a lot of money and they fight in the courts, sometimes they just say, hey, let's make an agreement. We'll share it, okay? And there's a thing called, traditionally what's called a quid pro quo, right? That's Latin for, I give you something, you give me something, okay? Depending on what your need is. So the second part of the question was a really good question. Why are the biotechnology companies not, or the biorational companies not doing that today, right? I think they're trying, but if you're a smaller company, how many hours in a day do you have to do that as a startup? So when I mentor a CEO in that space, he chuckles, he says, Bob, I still have it on my checklist. We talked about this 2 months ago. I just don't have the time to do everything, okay? Because it does take time to contact other people. Sometimes I think it's just not the natural thing to do. You're so busy executing, you just don't have that time. But you do see from the private equity side, people rolling up companies, like Rovenza is a roll-up. Okay, so it is going to happen, and I agree with you. Why should there not be a $1 billion, for example, biorational company, right? And maybe it's mergers or it's alliances or a number of those things. But I think it's just not, the market's just not ripe for that yet. But it's probably going to go in that direction at some point in time. I mean, the question you have to ask yourself, for example, if you take a Syngenta, and I'm just guessing, so please don't quote me on this. If you're a $30 billion chemical company and you have a $1 billion biorational entity, right? And they're far away from that. Does that have really any meaning in your portfolio? Do you understand what I'm saying? So maybe today they're 200 million, and then the question is, how much money and time are you going to spend to go to $1 billion? Where you have on the other side, your core business, your traditional business, and maybe you're going to invest in that side of the business before you invest in that side of the business, right? So a lot of it had to do, like in the last, I would say, 5, 7 years, ESG became a very big thing in the investor mind, right? You had the ESG SPAC funds, right? Everybody was trying to look very green, right? And, so it looked very interesting. Hey, let's go buy something green. But is that really the place where it's going to take off? I'm not 100% convinced. I mean, the time will tell.
Okay. All right, does anyone else have any questions? No? Okay. Well, thank you very much.
No, you're very welcome. I'm glad I answered all your questions.